continues for us, unfortunately. But shifting focus, let's pivot to the conversation that my colleague Anurag Joshi had with Parminder Chopra, the chairperson and managing director of PFC, over their Q4 numbers. Listen into a slice of that chat.
PFC, we have always tried to balance the same, and we are tapping the diversified sources of funds. If you see the borrowing plan of PFC for 1,60,000 crore, so even for the current year, we have 60% raising from the bond and 20% from the term loans and 20% from the foreign currency. I agree there has been volatility around the foreign currency funds, but when we go for the external commercial borrowing in the form of syndicated loan, we get a better yield as compared to the bonds in the market. And from the term loan and the domestic, it's the timing when we hit the market and we try to balance out our cost of borrowing by that way.
Right. Coming into this quarter and also in FY27, if interest rates were to move up, if the RBI is going to raise rates, you see an impact on profitability in this FI?
See, I think for any of the financial institution, if you talk even for the banks, the cost of funds is a part of the lending rates which are being decided. For the banks also, it is the MCLR rate, which is of that, the cost of the raising the funds along with other costs, associated costs are factored into while deciding the lending rate. And so is going to be for the PFC. So for us, whatever spread we are going to earn, I think that is going to be crucial for deciding our profitability going ahead.
Right. And also, profits of over 20,000 crores now. This is a pace, take us through what has helped you achieve that in FY26.
So in FY26, there has been, it was a very, I will say that it was a tough year in some occasions, but on the other side, the business has been good. We have disbursed around 1,65,000 crore of loans to the various utilities and for the power sector. So if I see that there has been 13% increase in our net interest income. On the other side, if we talk that the resolution of asset and reversal of in the expected credit loss to the tune of around 1,800 crore has helped us to achieve the numbers which you are looking at for the growth in the profitability. While it has been negative on the volatility in the forex, which has been absorbed by the other factors in the income.
Right. Ma'am, give us an update about the progress of the Power Finance Corporation's merger with REC. Is that going on, and by when are you looking to complete the merger, given the fact that the FY27 budget had mentioned about both the financial institutions merging?
Yeah, you rightly said that the budget of FY27 has announced the restructuring of PFC and REC. Consequent to that, both the boards have decided to merge both the entities. And it is expected that from 1st of April 27, the merged entity will be in place. For that, that as per the process required, you need to have a lot of regulatory approvals, which include MCA, RBI. Being a listed company, we need SEBI approval, and all those statutory approvals will be required apart from the different processes. We have already appointed the legal consultant, transaction advisor, and the valuers in the process.
Right. Also, your NPAs now, you've reported 0.13% in FY26. Okay, and there's been a significant reduction in the gross NPA percentage. Are there any kind of assets on PFC's books, which you feel are of concern, which you would try to, probably restructure or would try to remedy in this FI?
I think on the NPA front, the worst has been past for PFC. If I talk, we have already resolved around 85% of the stressed assets. If I talk about the peak assets of in the non-performance category, around more than 30,000 crore. So right now we have around 6,000 crore in the NPA category, of which if we say that around 25% of the assets are in advanced stage of resolution. So two of the assets which are constituting 25% are in the advanced stage of resolution. And on the balance, we have more or less 100% provided for, and we are not looking as of now any new NPAs, majorly new NPAs falling in the category for the stress.
Right. PFC is also a key borrower of foreign currency loans and bonds. Given the fact that there's an uncertainty about the conflict in West Asia, inflation is rearing its head globally. How will that affect your offshore borrowing plans?
On the borrowing front, as I said, that generally our policy is around 20% borrowing from the offshore market. But yes, definitely the crisis in the West Asia, we are monitoring the markets regularly. And as and when we find that they are conducive for borrowing in the foreign currency, only then we will be approaching them.